Good morning, everyone. I guess there are no doubts, so we can continue with the remaining part of this standard. I think we will be in a position to finish off this standard. However, I can now see one doubt which says practice question 8 and 9. Let me have a look at practice question 8 and 9. Okay, here we go. Practice question 8. I'm quickly repeating 8 and 9 for you. I hope it will solve your doubt. And if anyone has any further doubts, please put it on the chat box, and then we come to the next part of the standard. It says in a particular case, there arises DTA on account of loss under that capital gains and unamortized preliminary expenses. Means it is because of capital gains and other than depreciation and uh, taxation loss. It is other than depreciation and taxation loss, which means we need reasonable certainty. अब आगे देखते हैं. The firm is not reasonably certain. तो हमें चाहिए reasonable certainty, and the firm is not reasonably certain about its future profits. Should DTA be recognized? Of course, the answer is no. You cannot recognize DTA because you need reasonable certainty, and you do not have reasonable certainty. Similarly, question number 9, it says in a particular case there arises DTA from unamortized preliminary expenses and the firm is 30% sure. So whenever you have unamortized preliminary expenses, which is other than depreciation and taxation loss, you need reasonable certainty, that is more than 50%. However, over here you have only 30%. So should DTA be recognized? The answer is no, because the firm should be reasonably certain for the future profit. Right? I hope, Akshay, that solves your doubt. Yes or no? I hope that solves your doubt. Okay, perfect. Fine. I think we are done with illustration number 3, page number 3.153. We are done with. We also did some institute study material questions. Now I think we should go to first transitional provisions. After we do transitional provisions, then we look at the remaining questions. Okay. Let's first go to transitional provision. So everyone, please come to transitional provision. And first, let us understand the meaning of transitional provision. Transitional provision means when you transit, when you move from one provision to another provision, one act to another act, one accounting standard to another accounting standard. That is known as transitional. And transitional provision is always applicable when first time an accounting standard becomes applicable to you. So say for example, I was a company to whom AS-22 is not applicable because AS-22 is applicable only to level 1 enterprises. Now because AS-22 is applicable to level 1 enterprises, what we will do is we will have to see that are we level 1 enterprise. It may so happen that we are level 2, but next year we become level 1 enterprise. So then accounting standard 2 will be first time applicable to us. Now when accounting standard 22 is applicable to us for the first time, how do we make those entries in the books of accounts is explained over here, right? So please be careful. It says when AS-22 is applied for the first time, DTL/DTA should be recognized against revenue reserve. So you have seen we have charged DTA and DTL to the profit and loss account earlier. But whenever AS-22 is applicable for the first time, you will not disturb the current year P&L. You will take it to revenue reserves. Look at the next point. If there is no revenue reserve or if there is insufficient revenue reserve, you will adjust against the opening balance of the profit and loss account. Just add over here profit and loss account. Just add over here profit and loss account. So first you will adjust against the revenue reserves. If you do not have sufficient revenue reserve, you will adjust against the opening balance of P&L. Third point, if there is no or insufficient opening balance of P&L, then you will show it as a negative balance in the reserves and surplus. So write over here negative balance in the reserves and surplus. You will show it as a negative balance in the reserves and surplus. You will show it as a negative balance in the reserves and surplus. Right, so it's an absolutely simple provision. All you have to remember is when AS-22 is applicable for the first time, you first adjust the DTA or DTL against revenue reserves. If you do not have revenue reserves, or if you have insufficient revenue reserves, you will adjust against the opening balance of the profit and loss account. And if there is no opening balance of P&L, or if there is insufficient opening balance of P&L, you will show it as a negative balance in the reserves and surplus. Right, quickly, everyone on the chat box, are you clear with this? Yes or no? Are you clear with this? Yes or no? Everyone on the chat box, are you clear with this? Akshay, Aman, Anjali, Aksa, Dipesh, Dhairya, Dhara, Digesh, Harshit, Harshita, Het, Ishika, Ishita, Kajal, Khushi, Manav, Nidhi, Nikita, Pavan, Pushti, Raghav, Raj, are you all clear with this? Rizwan, Rohan, Samira, Shivai, Simran, Om, Spruha, Shrushti, and Tulsi. Okay, perfect. If you all are clear with this, let's come to recognition of deferred taxes for firms enjoying tax holiday. Come to this provision. Come to this provision. Recognition of deferred taxes for firm enjoying tax holiday. Now let's first understand what is tax holiday. You will be taught this when someone will teach you chapter 6A of the Income Tax Act 1961. These provisions are a part of chapter 6A of the Income Tax Act. You have 80IA, 80IB. 10A, 10B is of course exempt income. So I'm sure you would have studied 10A, 10B when you study chapter number 3 of your study material for income tax. That is where these two sections lie, 10A and 10B, which is exempt income. They talk about exemptions. Now let's go to tax holiday period. What is a tax holiday period? Now please understand this. Say for example, the government decides that we want to develop Statue of Unity and make it a tourist spot. Are you getting it? What does the government decide? That there is a place called Statue of Unity and we want to make it a tourist spot. Now, because you and I stay at Vadodara, it is easy for us to go in the morning and come back by evening because the travel time is very less. However, people who come from Mumbai, people who come from Chennai, people who come from Delhi, people who come from Bangalore, people who come from Pune, for them this is not possible, which means they have to stay overnight at Statue of Unity. Only then they would like to visit. Now, if you want to stay overnight, you need decent and proper hotels. So you invite a lot of hotel owners and tell them to build a hotel at Statue of Unity. Now you are afraid that if I build a hotel at Statue of Unity, one, it is too far from Vadodara. Second, it is a tourist spot. So because it's a tourist spot, you will not have frequent and continuous business. You will have seasonal business. So during vacations, you will find a lot of people visiting and staying. When you have exams on, when you have off season, you will not have any kind of guests there. So you are not motivated. You are absolutely not motivated to go over there and build a hotel. But the government has decided that we want to promote this place as a tourist spot. And because we want to promote this place as a tourist spot, we need hotels anyhow. So they introduce a scheme. The scheme says that whoever builds a hotel at Statue of Unity, whoever builds a hotel, keeps that hotel in operation for at least 8 years and functions with at least 60 rooms in the hotel and provides all facilities, builds at least a 3-star hotel, will have to pay no tax for the next 5 years. Will have to pay no tax for the next 5 years. So the government will come out with this scheme in order to promote tourism at a particular place, that if you make a hotel, keep it for 8 years, have at least 60 rooms in the hotel, you provide all the facilities, you have a 3-star hotel, then for the next 5 years you are on a tax holiday, no tax is to be paid. Can someone tell me on the chat box what is the tax rate for a corporate entity? Can someone tell me on the chat box what is the rate of tax for a corporate entity? Everyone on the chat box, I'm sure you have studied this somewhere. What is the tax rate? ये पहले chapter में ही आता है. Basis of charge. You have chapter number 1, basis of charge. Okay, perfect. You have 30%. Now let's calculate. Let's calculate for ourselves. Say for example, even if the company earns 5 lakhs in 1 year, I'm being very pessimistic, but even if a company earns 5 lakhs, how much do they save? 1,50,000 is direct savings, direct earnings. If they continue this for 5 years, 7,50,000, the most pessimistic figure that I'm saying, is their savings. Now a hotel owner would definitely think to invest over here because he is having a lot of benefits over here. This phenomenon is known as the tax holiday period. Right now, what will happen when you have a tax holiday period? How does that affect deferred tax asset and liability? The accounting standard is very clear with that any timing difference which originates in the tax holiday period and also reverses in the tax holiday period will always be ignored. Why? Because you will have accounting taxable income, you will never have you will have accounting income, but you will never have taxable income. So whatever difference originates in that period will reverse itself, and reverses itself in the same period, you will ignore it. Which means in first year of the tax holiday period, there is a timing difference of 10,000. That reverses itself in the second year, so you will completely ignore it. Any timing difference which originates inside the tax holiday period and also reverses inside the tax holiday period will be ignored. Timing difference which originates in the tax holiday period but reverses after the tax holiday period is over, that will result into deferred taxes. And when you do the reversal, you will take first in first out basis. मतलब जो difference पहले arise हुआ है वो बाद में पहले reverse होगा, जो बाद में arise हुआ है वो बाद में reverse होगा. Are you getting it? So you have to remember 3 points, and I will do practice question 11. That will make everything clear for you. So let me just explain to you. Let me solve question number 11, and then you will be conceptually clear with what I'm trying to say. It says recognition of deferred taxes for firms enjoying tax holiday under section 80 IA, 80 IB, 10A and 10B. It says timing difference which originates and reverses during the tax holiday period should be ignored. Timing difference which originates in the tax holiday period, but reverses after the end of the tax holiday period will result into deferred taxes. And reversal in this case will always be on FIFO basis. Right, let's quickly have a look at question number 11 and then we take your doubts if you have any. It says ABC Limited is enjoying tax holiday period for the next 10 years. In the first year, मतलब 10 साल का tax holiday period है, in the first year there arises a timing difference of 200 lakhs. So let me put over here. In the first year, there arises a timing difference of 200 lakhs. In the second year, there arises timing difference of 400 lakhs. So in the second year, there arises a timing difference of 400 lakhs. Both the above timing difference are leading to deferred tax liability. दोनों timing difference क्या है आपके लिए? Deferred tax liability है. The DTL will reverse itself from the third year to the extent of 10 lakhs per annum. Third year से reversal शुरू हो गया. So I'm writing over here. Third year reversal शुरू हो गया 10 lakhs per annum से. So we are at year number 3. The tax holiday is for 10 years. So this is the 4th year. This is the 5th year. This is the 6th year. This is the 7th year. The 8th year. 9th year. And your 10th year. Let's understand this. 10 lakhs every year. So how much is reversing? Can someone tell me on the chat box how much is reversing from 3rd year to 10th year? How much is reversing from 3rd year to 10th year? Aman, how much is reversing till the 10th year? 80 lakhs. Okay, so this 80 lakhs, please be careful. This 80 lakhs originates in the tax holiday period and reverses itself in the tax holiday period. What will you do to this? Ignore. From the 11th year, you will start showing deferred taxes. Now, can someone tell me, पहले कौन सा deferred tax adjust करना चाहिए? 200 या 400? पहले सबसे पहले कौन सा deferred tax adjust करना चाहिए? 400 or 200? 200 because we always follow the FIFO method. So FIFO method says पहले जो arise हुआ पहले उसको reverse करेंगे. Okay, everyone on the chat box. पहले वाले 200 lakhs में से कितना अभी भी reverse करना बाकी है? How much is yet to be reversed? 120. So we will first reverse 120. What about the remaining one? The remaining 400 will be reversed completely, yes or no? The remaining 400, will it be reversed completely, yes or no? Yes, so that I'm writing 400. In short, how much DTL is yet to be reversed now? 520 lakhs. How much DTL will be reversed now? 520 lakhs. Right, are you getting it? Let's look at the solution. It says, as per AS-22 accounting for taxes on income, deferred taxes are to be recognized for timing differences which reverse after the end of the tax holiday period. In the given case, in the first year, timing difference is rupees 200 lakhs. From 3rd year to 10th year, 10 lakhs, 80 lakhs, that is 10 lakhs till the 8th year shall reverse. This reversal shall be ignored because it originates and reverses during the tax holiday period. Deferred taxes to be recognized shall be on timing differences of 120 lakhs. Since reversal follows the FIFO principle, 400 lakhs will reverse after the end of the tax holiday period and therefore will be recognized. Are you getting it? Are you clear with this? Let me quickly revise this with you. We are asking how will we recognize deferred taxes when you have a tax holiday period. So how will you do that? Any difference that originates and reverses during the tax holiday period will be ignored. Timing difference which originates in the tax holiday period but reverses after the end of the tax holiday period will result into deferred taxes. Reversal in this case will always be on FIFO basis. So you will always have this on the FIFO basis, which means if there is a difference that originates today inside the tax holiday period and reverses inside the tax holiday period, you will always have the FIFO. You will always have to ignore that. And if there is a difference that originates in the tax holiday period and reverses after the tax holiday period, then that will result into deferred taxes after the tax holiday period. The reason why you take FIFO method is that because one difference that originates earlier needs to be reversed first and only then you have the second difference in line, because that is how taxation adjustment has to be there. Because today you are paying lesser tax because of one difference and that difference will reverse itself first. So technically FIFO method is to be applied because it is always first come first in terms of reversal basis, right? I hope Dhara and Raj that solves your doubt. Okay, so everyone on the chat box, are you clear with this? Yes or no? Quickly, everyone, this is an important concept. So Akshay, Aman, Anjali, Aksa, Dipesh, Dhairya, Dhara, Digesh, Harshit, Harshita, Het, Ishika, Ishita, Kajal, Khushi, Manav, Nidhi, Nikita, are you all clear with this? Pavan, Pushti, Raghav, Raj, Rizwan, Rohan, Samira, Shivai, Simran, Om, Spruha, Shrushti, and Tulsi. Are you all absolutely clear with this? Yes or no? I am giving you 2 minutes. Quickly have a look at the concept properly. It is on your screen. If you have any doubts, please ask me. And then we proceed to the next part. Okay, I have one doubt which says, would the benefit of tax holiday be available to subsidiaries, fellow subsidiaries of the company to whom benefit of tax holiday is given? So basically, tax holiday period is not given to company or it is given to an organization. So it depends on by what name are you functioning at the area where you want to take tax holiday benefits. So if you have company A, its subsidiaries company B, its subsidiaries fellow company C. Sorry, its fellow subsidiaries company C. So now if you take company B, and if company B is the one that is operating and is eligible for tax holiday period, then of course company B will get the benefit. So it is not holding subsidiary, it is on the organization who is establishing the setup over there, and it is that organization who will take the tax benefit. I hope that answers your doubts, Pruva. Okay, I guess there are no doubts, so we can proceed. Question number 14 is what we have done. Let's go to another concept. We did transitional provisions. We are yet to do study material question illustration number 5. And we are yet to do minimum alternate tax. Okay, let me explain to you the concept of minimum alternate tax and then we go to the study material. Now please pay attention. Again, this is a very interesting concept. It says recognition of deferred taxes in the context of minimum alternate tax. Now see what happens so many times when students study income tax and then I teach them accounting standard 22, still they have a lot of confusions. But if you all have any confusions, please ask me on the chat box. I will explain to you the same concept conceptually and completely. So please ask doubts. And now let's come to MAT. Now MAT is also a CA final level concept, but I will explain to you in the most easiest manner. But you please pay attention to what I'm saying. There was one problem that the income tax department was facing. One company, I'm writing over here, please pay attention. One company has two profits. One is accounting profit and one is taxable income. Now, if I tell you that there are less deductions and there are more deductions here, if there are less deductions over here, if there are more deductions over here, tell me, where will the profit be high, accounting income or taxable income? Where will the profit be high, accounting income or taxable income? Everyone can logically think and reply to me on the chat box. Where will you have higher income? Of course, you will have it at accounting profit. Okay, which means there is more profit over here, there is less profit, or even a loss over here. Less profit तो है, लेकिन कितनी बार आपके पास loss होता है. Okay, everyone on the chat box, will you pay tax if you have a loss as taxable income? Can you pay tax, yes or no? Of course, there is no tax. So because you have a loss, no tax over here. I am repeating, one company, same financial year. Accounting profit, because it has lesser deductions, more profit. Taxable income, because it has more deductions, less profit. Because you have less profit or you have a loss, you do not pay tax to the government. Same company, same financial year. If you have more profit, will you pay dividend, yes or no? Will you pay dividend? Of course, yes, you can pay dividend. Now the income tax department has a problem with this. कि जब हम आपको कहते हैं कि हमको टैक्स पे करो, आप बोलते हो नहीं नहीं हमको लॉस है. Whenever we tell you that please pay tax, you say no, there is a loss. And same financial year, same companies, out of same transactions, you have accounting profit and you pay dividend to the shareholders. You have no money to pay tax to government, but you have money to pay tax to your equity shareholders. You pay dividend to them. This is not proper. So then they introduced for the first time section 115 JB of the Income Tax Act, which talks about minimum alternate tax, where they tell you to calculate the book profit, which almost makes the provisions equivalent to the accounting profit. And then they tell you to pay 18.5% tax on the book profit. This 18.5% tax that you will pay is known as minimum alternate tax. This is known as what? Minimum alternate tax. अगर आपको लॉस हो रहा है तो भी इतना मिनिमम टैक्स आपको पे करना ही है. दैट इज नोन एज मिनिमम ऑल्टरनेट टैक्स. व्हाट इज द रेट ऑफ टैक्स? 18.5%. राइट. हमको क्या ध्यान रखना है मैट में? इधर देखो, it says deferred taxes in respect of MAT should be calculated using the regular tax rate and not the special MAT rate. So we always have to look at the regular tax rate that we follow and we will ignore the special MAT rate. Now you will understand this conceptually when we do this question, illustration number 2 of the study material. Right, let's go to that question. But before that, I want to ask you two things. One, are you clear with this? Are you clear with the concept of what is minimum alternate tax? Everyone on the chat box, are you clear with what is MAT? Yes or no? Okay, if you all are clear with this, tell me one thing on the chat box. Please look at your study material carefully and tell me, we are left to do illustration number 5 and we are left to do illustration number 2. Apart from this illustration number 2 and apart from illustration number 5, have we done everything? Yes or no? Are we left only with these two questions? Yes or no? कि और कोई question भी बाकी है? Please check and tell me. I think where is it? Illustration number 4 of the study material. Okay. I'm not talking about the study material. I am talking about this material that I have given to you. इसमें दो ही question बाकी है, right? One question is illustration number 2 of the study material and one is illustration number 5 of the study material. Am I right? Yes or no? Quickly, everyone on the chat box. ये दो ही question हमारे बाकी है इस material से. Study material we'll see later. Can someone please help me out with that? That we are left out only 2 questions from this study material. Please check properly and tell me. We should not miss anything. Apart from these two, Is anything left? Okay, thank you. I think these are the only two questions that are left. Now, what I would suggest is we will have to do illustration number 5. We will then do illustration number 2, the last question. These are the only two questions that are left. Then we will look at the institute study material. Now, before we go to the institute study material, what I recommend is you take a 5 minutes break. It is right now 8:50. In fact, you take a 10 minutes break. I'll see you at 9 o'clock sharp. At 9 o'clock, we begin with the institute study material. We first look at the definition. See, I've mentioned over here that we need to check the definition. So we'll first look at the definition so that you have conceptual clarity. Then we'll look at the other theory part, and then from the study material, we will solve all the remaining questions, which will also cover these two questions. So illustration number 4, illustration number 2, and 5 will be left. Right. So quickly, let's take a 10 minutes break. I'll see you sharp at 9 o'clock. Thank you. Okay, let's continue. Look at the study material and let's begin with the definitions on 3.148. It is not 3.148, it is 1.107 in the new study material. So come to 1.107. Let's quickly have a look at these definitions. We have studied almost everything. So let's revise this. Definitions. Okay, let's begin. It says accounting income oblique loss. So accounting income is the net profit or loss for the period as reported in the statement of P&L before deducting income tax expense or adding income tax savings. So it is net profit or loss in of the profit and loss account. Taxable income is the amount of income or loss for a period which is determined in accordance with the tax laws based upon the income tax payable or recoverable is determined. Let's come to the next one, tax expense, which says it is the aggregate of current tax and deferred taxes charged or credited to the statement of profit and loss. Current tax is the amount of tax determined to be payable in respect of the taxable income for the period. Deferred tax, the tax is the tax effect of timing differences. The difference between the taxable income and the accounting income can be classified as either permanent difference or timing difference. ये तो हमने पढ़ लिया है. Permanent difference is the difference between the taxable income and the accounting income for the period which originates in one period and it is capable of reversing itself in one or more subsequent periods. Permanent difference is the difference between taxable and accounting income for the period that originates in one period and does not reverse itself in the subsequent period. So these are all some of the definitions. I have also summarized 3 formulas over here, which will be very useful when we do the last 2 questions. So let's also have a look at those formulas. It says tax expense is equal to current tax plus or minus deferred taxes. तो कभी भी tax expense ढूंढना हो तो कैसे ढूंढेंगे? Current tax plus or minus deferred taxes. Current tax का मतलब क्या है? इस formula से current tax means tax computed as per the income tax act. So whatever tax you will compute as per the income tax act, that is known as your current tax. What is the amount you will debit to the profit and loss account? You will take current tax plus deferred taxes plus excess of MAT over current tax. So whatever extra tax you are paying over the current tax, that you will have to add over here. So we will use all these formulas in one question and you will conceptually understand that. Fine, we are done with the definitions, we are done with those formulas. Now let's go to illustration number 4. Let's solve illustration 4. Okay, let's understand this question. It says XYZ is an export-oriented unit and it is enjoying tax holiday period up to 31st March 2016. No provision for DTL is made for the year ended 31st March 2016. While finalizing the accounts for the year ended 31st March 2017, the accountant says that the entire DTL up to 31st March 2016 and the current year deferred tax liability should be routed through the profit and loss account, as the relevant accounting standard has recently become mandatory. Means it has already become mandatory from 1/4/2001. Do you agree with this? Now please understand. 1/4/2001 it became applicable, AS-22, and we till 31st March 2016 are enjoying tax holiday period. So everyone on the chat box, can I say that this is the first time after application that AS-22 becomes applicable to us? Yes or no? Can I say that this is for the first time that AS-22 is becoming applicable to us? Yes or no? Everyone on the chat box. Yes, because it became applicable in 2001, but till 2016 we were enjoying tax holiday period. So for the first time, this standard becomes applicable to us. Can someone tell me on the chat box when AS-22 becomes applicable for the first time? First adjustment is made from where? Initial adjustment is made from where? From the revenue reserves. Excellent. We saw that in the transitional provisions today. What if we have insufficient revenue reserves? What if we have insufficient revenue reserves? You will show it from the opening balance of P&L. What if you have insufficient balance in the opening balance of P&L? You will show it as a negative balance in the reserves and surplus. Okay, that is the same thing that we will be explaining over here. Let's read the solution. It says AS-22 accounting for taxes on income relates to the transitional provisions जो हम पढ़ चुके हैं. It says on the first occasion that taxes on income are accounted for in accordance with this statement, the enterprise should recognize in the financial statements the deferred tax balance that has accumulated prior to the adoption of this statement as deferred tax asset or liability with a corresponding charge to the revenue reserves, subject to consideration of prudence in case of deferred tax asset. So deferred tax asset, you will always take into account the prudence concept, which is reasonable or virtual certainty. Further, AS-22 lays down for the purposes of determining accumulated deferred tax in the period in which this statement is applied for the first time, the opening balance of assets and liabilities for the purposes and for accounting purposes and for tax purposes are compared, and the difference, if any, are determined. The tax effect of these differences, if any, should be recognized as deferred tax asset or liability if the differences are timing difference. So of course, the difference will be disclosed only if it is a timing difference. Therefore, in the case of XYZ, even though AS-22 came into effect on 1/4/2001, the transitional provisions permit adjustment of deferred tax liability or asset up to the previous year to be adjusted against the opening reserves. In other words, deferred taxes not provided for alone can be adjusted against the opening reserves. Of course, पिछले टाइम तक जितना है जो फर्स्ट टाइम एडजस्टमेंट होगा वो ओपनिंग बैलेंस से आएगा. Provision for deferred tax asset liability for the current year will be routed through the profit and loss account like any other normal provision. Right, are you clear with this? Yes or no? Everyone on the chat box, are you clear with this? Yes or no? Quickly, everyone on the chat box, are you clear with this? Akshay, Aman, Anjali, Aksa, Dipesh, Dhairya, Dhara, Digesh, Harshit, are you all clear with this question? Harshita, Het, Ishika, Ishita, Kajal, Khushi, Manav, Nidhi, Nikita, Pavan, Pushti, Raghav, Raj, Rizwan, Rohan, Samira, Shivai, Simran, Om, Spruva, Shrushti, and Tulsi. Are you all absolutely clear with this? Okay, perfect. If you all are clear with this, let's go to the let's go to the next question. Let's do illustration 5. Mark this question, very important question. Illustration number 5. Mark this very important question. Okay, let's read this question. It says PQR Limited's accounting year ends on 31st March. The company made a loss of rupees 2 lakhs for the year ended 31st March 2015. For the year ending 31st March 2016 and 31st March 2017, the company made a profit of 1 lakh and 1,20,000 respectively. It is assumed that the loss of a year can be carried forward till 8 years. मतलब एक साल में लॉस होगा तो वो 8 साल तक आप एडजस्ट कर सकते हो. कैसे एडजस्ट करोगे मैं ये क्वेश्चन में आपको समझाऊंगा. And the tax rate is 40%. By the end of 31st March 2015, the company feels that there will be sufficient taxable income in the future against which its losses can be set off. Can someone tell me what is the meaning of this statement? Can someone tell me what is the meaning of this statement? That the company feels that there will be sufficient taxable income in the future. It talks about virtual certainty. Yes. Yes, of course, that is correct. It talks about virtual certainty. So if there is DTA in this question, can I recognize it? Yes or no? If there is DTA in this question, should I recognize it? Yes or no? Yes, of course, I should recognize it. Okay, perfect. There is no difference between taxable income and accounting income, except that carried forward loss is allowed for the years 16 and 17 for tax purposes. Prepare a statement of profit and loss account for the year 15, 16, and 17. So it is for 3 years that I will have to prepare the profit and loss account. So let me first solve this question. I'll give you sufficient time to copy. First, understand this question carefully, and then you copy. Don't copy without understanding, please. We are doing illustration number 5, which is on page number 1.114. So we have illustration number 5, page number 1.114. We have to prepare a statement of profit and loss account. So you will first have particulars, 31st March 2015, 31st March 2016, 31st March 2017. You will always prepare a systematic format. Please draw lines, write everything neatly. Don't write in a haphazard manner. Of course, all values are in rupees, but the question is rupees in lakhs? No, it is not in lakhs. So rupees is not in lakhs. Fine, let's begin. Your profit or loss. It says the company made a loss in 31st March 2015. So you have profit oblique loss. Two lakhs is your loss. Look at the next year. It says the company had profit of 1 lakh and 1,20,000. So you have 1 lakh and 1,20,000. Right? What have I done? I have simply copied the information given in the question. They have clearly given you in the question that first you have a loss of 2 lakhs over here, and then you have a profit of 1 lakh and 1,20,000. Right? Let's see what happens. Let's calculate current tax. So current tax. Everyone on the chat box, will you have any current tax in the first year when you have a loss? Yes or no? Will you have any tax in the first year? No. So I'm writing over here nil. Okay, now please understand this concept. Loss of 1 year can be carried forward till 8 assessment years. Can someone write on the chat box quickly? What is your loss in the first year? What's your total loss? What's your total loss? 2 lakhs? Okay. And what's your profit in the next year? What's your profit in the next year? 1 lakh. Can I adjust 2 lakhs from 1 lakh? I can adjust. So I'm writing over here 1 lakh मेरा profit था, उसमें से मैंने 1 lakh minus कर दिया. This is known as the meaning of set off. This is the meaning of set off. If I have 2 lakhs of loss and next year I have 1 lakh profit, can I adjust it? Yes, I can adjust it. After adjusting, what's my current tax? Still it is nil. Are you getting it? Okay, next question. 2 लाख में से मैंने 1 लाख एडजस्ट कर दिया, कितना अभी भी एडजस्ट करने को बाकी है? ऑन द चैट बॉक्स एवरीवन, कितना एडजस्ट करने के लिए अभी भी बाकी है? हाउ मच इज स्टिल टू बी एडजस्टेड? 1 लाख. व्हाट्स योर प्रॉफिट इन द नेक्स्ट ईयर? What's your profit in the next year? 1,20,000. Let's adjust that. 1,20,000 minus 1 lakh. How much do you get? 20,000. Calculate tax on that. 20,000 into 40%. How much do you get? On the chat box, what's your current tax? 8,000. Everyone gets 8,000. 8,000. Okay, are you all clear with this much? Yes or no? Are you all clear with at least this much? Yes or no? Are you all clear with the first part of the solution? Quickly on the chat box, yes or no? Only then we can proceed to the next part. Okay, if you all are clear with this, let's go to the timing difference. Now, if you all agree, from this taxation loss, you have a timing difference. So let's put effect of timing difference. Please understand. Say for example, my accounting profit is 0. Say for example, my accounting profit is 0. What is your taxation profit? It is minus 2 lakhs. Can someone explain to me, looking at this on the chat box, what is the difference between accounting profit and taxable profit over here? Your taxable profit goes into minus. No information is given about accounting profit, so I'm putting 0 over there. So एक तरफ 0 है, एक तरफ minus 2 lakhs है. How much is the difference between the two? Quickly on the chat box. Yes, of course, it is 2 lakhs. So your effect of timing difference will be on 2 lakhs. What's your tax rate? 40%. So 40% of 2 lakhs comes to how much on the chat box? 80,000. Sorry. Effect of timing difference is how much? 80,000. This 80,000 that originates in one period will reverse itself in the next period. So let's take reversal of timing difference. Reversal of timing difference is nil over here. Over here, 1 lakh got adjusted. So now you have only 1 lakh into 40%, which comes to 40,000. Similarly, 1 lakh got reversed in the third year. So that will also get reversed in the third year. Now, can you see difference originating in one period is reversing itself in the next period? Are you understanding? Yes or no on the chat box? Are you clear with this? Yes or no? Let's calculate the profit. What do we have to find in the question? Statement of P&L. So statement will always give you profit after tax. Let me put it this way. You have minus 1,20,000. You have 60,000. And over here you have 1,20,000 minus 8 is 112 minus 40. You get 70,000. Minus 2 lakhs. Add to that your timing difference. This is your final answer. Okay, now I have 3 doubts. All 3 very interesting. Let's understand that. First doubt is, how can we treat it as timing difference? Because in the first year we didn't pay any tax. And then because of that loss, we are paying less in the second and the third years. Prove you're getting it wrong. In the first year, you did not pay tax, but you got negative 2 lakhs income, which will set off and carry forward itself in the future. Now, when you will study income tax section 72, you will get clarity on that. But don't think that we didn't pay any tax, or from taxation viewpoint, there was no impact. There was an impact of minus 2 lakhs because that minus 2 lakhs is now going to be adjusted in the future. Now because you have minus 2 lakhs, you know कि ये minus 2 lakhs आ जाए, next year जब भी profit आएगा ये reduce होते जाएगा, और एक point third year में ऐसा आएगा जब हमारे पास 20,000 का profit आएगा. So because this is getting reversed, this is a timing difference. Now you have to think in this way, that you have paid lesser tax today. So it is basically pay less today, pay more in the future. This is DTL. So Raj, the answer to your question is, this is DTL. Right? I hope Akshay, Spruha, and Raj, this solves your doubt. I hope Akshay, Spruha, and Raj, this solves your doubt. Okay, perfect. Take this down properly. I will put it on your WhatsApp group as well. But before that, you can take it properly from here. It is clearly visible. Take it down properly. Take it down properly. Once you're done, please put done on the chat box. Please put done on the chat box once you're done. Okay, let's go to the last question if you're done with this. So now in the entire study material, we are done up with all the questions. Only question that is left is question illustration number 2. So let's do illustration number 2. Mark this also. Very important question, illustration number 2. Mark this question, very important. Illustration number 2, your study material question, which is on page number 1.112. So you have it on page number 1.112. Let's read the question and understand it carefully. It says, from the following details of A Limited for the year ended 31st March 2017, calculate DTA/DTL as per accounting standard 22 and the amount of tax to be debited to the profit and loss account for the year. So let's prepare a systematic format. Calculation of DTA/DTL is what we have to do. Calculation of DTA/DTL. You have accounting profit 6 lakhs, book profit as per MAT 3,50,000, profit as per the Income Tax Act 60,000. Your tax rate is 20% and your minimum alternate tax rate is 7.5%. Now comes the problem in the question. You know there is a difference between accounting profit and profit as per the Income Tax Act, but the reasons for those difference is not given in the question. Right, so let's see how can we solve this kind of a question. Let's understand it carefully. Let's first calculate the tax as per accounting profit. Let me again solve this question. I'll give you sufficient time to copy. Tax as per accounting profit. Can someone help me with the tax as per accounting profit? What's your profit? What's your accounting profit? Quickly on the chat box. What is your accounting profit? 6 lakhs? So you have 6 lakhs into, what's your tax rate? 20%. Tell me, what's your tax? One lakh 20,000. You have 1,20,000. Okay. Let's then calculate tax as per income tax profit. What's your income tax profit in the question? 60,000. So tax as per income tax profit, 60,000 into 20%. How much do you get? 12,000. So you have 12,000. Now, if you think logically, accounting profit 6 lakhs, taxation profit 60,000. What's your timing difference? 5,40,000. 5,40,000. You can multiply directly by 20%. How much do you get? 1,08,000. That is exactly the same value you will get when you deduct 1,20,000 from 12,000. So let's take timing difference is equal to 1,08,000. How do you get that? 1,20,000 minus 12,000. Can someone tell me on the chat box, is this DTA or DTL? Can someone explain to me on the chat box, is this DTA or is it DTL? This is definitely deferred tax liability. Your deferred tax liability is 1,08,000. You get 5,40,000 you as your difference, and you get 1,08,000. 1,08,000 can also be derived this way: 5,40,000 into 20%. Okay, first question. Are you clear till here? Yes or no? On the chat box, everyone. Are you clear with the first part? Okay, one thing I want each one of you to remember is, whenever no information is given in the question, you will take it as a timing difference. If it is permanent difference, they will give you in the question के permanent difference है. Over here no information is given, so we take it as timing difference. अगर permanent होता तो वो सामने से आपको बताते कि permanent difference है. नहीं बता रहे मतलब ये timing difference है. Right? Okay. So we are done with one part of the question. We know that we have deferred tax liability of 1,08,000. Here we go. We have a deferred tax liability of 1,08,000. ये हमको पता चल गया. We have got this right. Now the question is calculation of amount to be debited to profit and loss account. How will we find this amount to be debited to the profit and loss account? Now, if you remember, we understood three formulas, in which one of the formulas says amount to be debited to P&L is current tax plus deferred taxes. So you have current tax plus deferred taxes plus excess of MAT over current tax. Can someone help me out with the values? What's your current tax in the question? Can someone help me out with the values? What's your current tax in the question? What is your current tax in the question? Everyone on the chat box. What is your current tax in the question? जो करंट टैक्स का मतलब क्या है? जो इनकम टैक्स एक्ट से आपको प्रॉफिट मिलेगा, कितना मिला है? 12,000 plus what's your deferred tax? 1,08,000. Remember, we have deferred tax liability plus excess of MAT over current tax. So we will have to calculate MAT. Calculation of MAT. What's your minimum alternate tax? Look at the question. It is book profit is 3,50,000, MAT rate is 7.5. So let's calculate that. 3,50,000 into 7.5%. Tell me, how much do you get? How much do you get? 3,50,000 into 7.5%. Everyone on the chat box, you get 26,250. 26,250. How much extra are we paying above MAT? 26,250 MAT आया और हमारा करंट टैक्स कितना है? 12,000. You get 14,250. How much will you debit to the P&L? You get 13,4,250. You have 13,4,250. So two questions were asked to you. Deferred tax liability, we found that over here, and amount to be debited to P&L, we found that over here. Are you clear with this? Yes or no? Everyone on the chat box, are you clear with this? If you're not clear, please ask me. Akshay, Aman, Anjali, Aksa, Dipesh, are you all clear with this? Dhairya, Dhara, Digesh, Harshit, Harshita, Het, Ishika, Ishita, Kajal, Khushi, Manav, are you all absolutely clear with this? This will need practice. Of course, you will have to practice, but you should be conceptually clear with this. Nidhi, Nikita, Pavan, Pushti, Raj, Rizwan, Rohan, Samira, Shivai, Simran, Om, Spruha, Shrushti, and Tulsi. Are you all absolutely clear with this? Yes or no? Okay, if you all are clear with this, take this down properly. Then we do the last theory part. Take it down properly. Once you're done, please put done on the chat box so that we can go to the last theory part and then we revise the entire standard. Take it down properly. If you have any doubts, please ask me. Please say done on the chat box once you're done with this. Once you're done, just put done on the chat box so that we can move to the last part, that is revising the entire accounting standard once and looking at one small theory part. Okay, if you're done, let's proceed to the last part, which says refer measurement, review of DTA and disclosure requirements. So let's quickly look at that from your study material. Let's quickly review that. See, virtual certainty we have already done. Recent explanation we have already done. Transitional provisions also we have done. Disclosure requirements we will have to look at. Measurement we have done. Review of DTA also we have done. But let's look at these three. They are small points. So let's quickly look at these points. These are three small theory concepts, not much important from exam viewpoint, but let's not skip anything. Let's do that as well. And then once we will quickly revise the entire accounting standard. It says current tax should be measured at an amount expected to be paid or recovered from the taxation authorities using the applicable tax rates and tax laws. Deferred tax asset and liability are usually measured using the tax rate and the tax laws that have been enacted by the balance sheet date. So whatever new tax rates have come on the balance sheet date, you will always use those tax rates. However, for your level, you will always be given tax rates in the question, so that will not be a problem. But remember, if future tax rates are given, you will always take the future tax rates, because your next year's profit against which DTL or DTA will be adjusted will always be on that year's tax rate. So always use the future tax rate. However, certain announcements of tax rate and tax laws by the government may have a substantial effect on the actual enactment. In these circumstances, DTA or L are measured using such announced tax rates and tax laws. Deferred tax asset and or liability should not be discounted to its present value. So no discounting is required. Review of DTA, the amount of DTA should be reviewed. The carrying amount of DTA should be reviewed at each balance sheet date. An enterprise should write down carrying amount of DTA to the extent it is no longer reasonably or virtually certain, as the case may be, that sufficient taxable income will be available against which DTA can be realized. So DTA will always have to be checked at every year. If there is no virtual certainty, you will have to carry forward that amount to the next year, or you may write it down or reduce that much that much of the carrying amount. Any such write down may be reversed to the extent it again becomes reasonably or virtually certain. So say for example, next year there is no reasonable or virtual certainty, then you will not take DTA or DTL. However, in the year after that, again you have virtual certainty or reasonable certainty, then again you will have DTA that can be reversed. After that, you have some disclosure requirements. Disclosure of DTA in the profit and loss account. Under AS-2, there is no specific requirement to disclose current tax and deferred tax in the statement of P&L. However, considering the requirements of the Companies Act, the amount of income tax and other taxes should be disclosed. AS-2 will never require any reconciliation between accounting profit and tax expense. So that's a very simple point. Come to balance sheet, the breakup of deferred tax and deferred tax liability into major components in the respective balance sheet should be disclosed in the notes to accounts. Deferred tax asset and liability should not be distinguished from assets and liabilities representing current tax for the period. Deferred tax asset and liability should be disclosed under a separate heading in the balance sheet of the enterprise, separately from the current assets and liabilities. The nature of evidence supporting the recognition of deferred taxes should be disclosed if the expense has unabsorbed depreciation or carried forward of losses under the taxation laws. An enterprise always has to offset asset and liabilities under the current tax. If we've already studied this, you always have DTA and DTL, and then you take either the net DTA or net DTL. You cannot take both in one balance sheet. So you will offset only if you have a legally enforceable right to set off assets against liabilities and represent current taxes. And an enterprise should offset assets and liabilities representing current tax if the enterprise has a legally enforceable right to set off their recognized expenses, which you have because of AS-22, and it intends to settle assets and liabilities on net basis. The enterprise should also offset DTA and DTL if the enterprise has legally enforceable right to set off against liabilities representing current tax, and the deferred tax asset and liabilities relate to taxes on income levied by the same governing tax laws. This will always be there in case of income tax. You do not have two governing laws. You will have only one central government who levies this tax. Right? That is all that you have from accounting standard 22. We have covered everything. We've also covered the entire study material. Now let's quickly go to accounting standard 22. Let's quickly revise the entire accounting standard. I'll not take more than 5 minutes, and in 5 minutes I will set you free. So let's quickly look at accounting standard 22. I'll give you a quick overview of the entire accounting standard, and then we will be done with our portion. Okay, let's quickly revise it. AS-22 says accounting for taxes or income. You will always compare your statement of P&L and your taxable income. There will definitely be a difference between the two. You will classify that as difference as permanent or timing difference. Permanent difference means difference that originates in one period and never reverses itself in the future. Is a permanent difference. We will always ignore it. Timing difference is a difference that originates in one period and reverses itself in one or more subsequent periods. Timing difference will lead to either deferred tax asset or deferred tax liability. After that, we will compare that tax paid today. If tax paid today is higher, means it is pay more today, pay less in the future, it is deferred tax asset. If it is pay more today and pay less in the future, it is deferred tax asset. Sorry, deferred tax liability. So pay less today, pay more in the future, DTL. Pay more today, pay less in the future, DTA. Right, the entry will be for DTL, P&L account debit to DTL. For DTA, it will be DTA account debit to profit and loss account. After that, we did a lot of questions to practice these concepts, and then we did a new concept. What are the conditions for recognizing DTA? If it is for deferred taxes, for DTL, you have no conditions to be satisfied. You will recognize it immediately in the books. For DTA, you will have to follow the table that is given to you. So for DTA, on unabsorbed depreciation or taxation loss, the firm should be virtually certain, that is 100% sure, that there is sufficient taxable profit in the future. If it is other than unabsorbed depreciation or taxation loss, you need reasonable certainty. If there is loss under that capital gains and there is unabsorbed depreciation or taxation loss, you need virtual certainty. If there is only loss under that capital gains, no unabsorbed depreciation or no taxation loss, you will need reasonable certainty. This is because of the prudence concept. After that, we studied a new concept today, which talks about the tax holiday period. So any difference that originates in the tax holiday period and reverses in the tax holiday period will be ignored. Difference that originates in the tax holiday period and reverses itself after the end of the tax holiday period will result into deferred taxes. Reversal will always be done on FIFO basis. And after that, we studied MAT. For MAT, we will always use the regular tax rate and not the special MAT rate. And then we also understood the three formulas that you have. We did the transitional provisions. If AS-22 is applicable for the first time, you will adjust against the revenue reserves. If there is no or insufficient balance, you will adjust against the opening balance of P&L. And if there is no opening balance of P&L, we will show it as a negative balance from the reserves and surplus. To calculate tax expense, you need current tax plus or minus deferred taxes. Current tax is nothing but tax calculated as per the Income Tax Act, and amount that we will debit to the P&L account is current tax plus or minus deferred taxes and excess of MAT over the current tax. Right, that brings you to the end of accounting standard 22. That also brings you to the end of your entire accounting standard syllabus. So the entire accounting standard syllabus for inter November 20 is now done. You are only left with accounting standard 9, that too only for those students who joined the class late after your results. So entire accounting standards is now done. Quickly, everyone on the chat box, are you clear with whatever we have done in accounting standard 22? Very important question I want each one of you to answer. Are you absolutely clear with this entire accounting standard? Akshay, Aman, Anjali, Aksa, Dipesh, Dhairya, Dhara, Digesh, Harshit, Harshita, Het. Are you absolutely clear with everything? Ishika, Ishita, Kajal, Khushi, Manav, Nidhi, Nikita, Pavan, Pushti, Raj, Rohan, Samira, Shivai, Simran, Om, Spruha, Shrushti, and Tulsi. Are you absolutely clear with whatever we have done? Yes or no? Okay, perfect. If you all are absolutely clear, that is it from accounting standards. We are done completely. I hope I was able to explain everything properly to you. I hope you all are satisfied with the kind of knowledge and education that was imparted to you. If you have any doubts, please come back to me. I will solve it. There is some technical problem with accounting standard 22 lectures, but give me a couple of days. I have told someone that by Monday or Tuesday, those lectures will be there on YouTube, and you can, of course, refer them. Your batch has one advantage, that all the lectures are on YouTube and you can view them whenever you want. So please keep revising thoroughly. I hope you had a good time learning accounting standards, and I hope it added value to your knowledge. I have just one doubt, which says, why did we use MAT rate in the second illustration? Because you said AS-22 uses the special rate and not the deferred tax rate. So Spruha, if you understand the solution carefully, we have only used MAT rate to find the difference. आपको जब डिफरेंस ढूंढना था 26250 minus 12,000, तभी आपने MAT rate यूज किया है. बाकी पूरे क्वेश्चन में you have always used the regular rate that you used. So only to find out the difference between what is the MAT rate and what is the regular rate, you have to use 7.5%. Apart from that, you have consistently used 20%, and that is how you have decided to debit the amount to the profit and loss account. Okay, I hope that solves your doubt. Perfect. Right, thank you so much for attending. And now I will see you in the next week only for accounting standard 9. You all are free to attend accounting standard 9 again. I am absolutely perfectly happy with that. Those who are not going to attend, I wish you all the best for your exams. Please study well and have conceptual clarity. Revise all the questions. Never miss out on the last day revision questions. Keep practicing. Don't check whether the solution given in the study material is correct or not. Solve yourself and then compare the two solutions. Do have writing practice. Do remember your target is to score at least 22 marks out of 24. That should be your target. So your target has to be 22 out of 24 in accounting standards, and you have to come out with exemption 60 marks in paper 1 and paper 5. Right, thank you so much for attending. Thank you for your time. Thank you for your patience, and thank you for your cooperation throughout the accounting standards session that we had. If you have any doubts, please come back to me. Do study well. Start preparing for your exams. Time will really pass quickly, and ensure that you pass out in this attempt and you have exemption in paper 1 and paper 5 with 22 marks out of 24 in accounting standards. If you have any doubts, please get back to me. Thank you so much for attending. And now I will see some or all of you for accounting standard 9. For the remaining, I wish you all the best. And if you have any doubts, please get back to me. Thank you.